Testing, testing, testing. JB here. May 10th, 2022. Hope everyone's doing outstanding. Gonna talk really quick. Only have 12 minutes, 45 seconds to the open. I've just been crazy last three sessions. NASDAQ having its worst three-session performance in history, over 10% the last three sessions. But it hasn't been straight down, hasn't been easy. The premiums are crazy on the put side. So not only that, you got to play the ups and downs. So for me, it's been easier just to preserve capital, sit on my hands, pick and choose spots to try and trade bounces. And that's probably what I'll continue to do. Such an easy narrative, and I've been saying this for weeks now. This whole backdrop of what's going on in terms of the inflation, the Fed, uh, raising rates, which was already telegraphed for quite some time. We have the geopolitical concerns with the war in Ukraine. Everywhere you read, prices are hurting the consumer. So it's almost this self-fulfilling prophecy, so to speak, where people are just going to continue to read the headlines and then they're going to stop spending, right? People are going to start cutting back on non-discretionary items, Netflix, streaming services, things like that. And then also you have to start to look at some of these casual dining restaurants, right? So you take a look at like a Chipotle Mexican Grill, a Wingstop, a McDonald's. Well, McDonald's is probably less susceptible because I think they'll do well regardless. But I think some of the reasons you see Chipotle, despite having great results and great guidance, falling back to levels it saw in March and back at levels it saw in February. Every time Chipotle gets down to under $1,300, it embarks on a 200 plus rally to the upside over the next week or two. So that's what I'll be watching on Chipotle. So enough rant there. Yesterday I added some JDust calls. JDST is the ticker. It is a two-time bear. It used to be three times. ETF that trades in inverse correlation to miners. So as the GDX goes down, JDust goes up, and looking at gold, and back in March it hit 2,100 all-time highs. And you would think, okay, this is the perfect scenario. If you had talked to a gold bull, people, I won't mention names, but people who are bullish gold who've been calling gold to go to 5, 10,000, even higher than that over the last decade or so. If you had asked them 10 years ago what would be the perfect scenario for gold, perfect environment, it would be runaway inflation, it'd be geopolitical tensions, people having concern over fiat currency, recessions, things like that. And it's a perfect scenario right now. It's like a perfect storm for gold. You would think gold would be going nuts. But I think what's different from 10 years ago to today, cryptocurrency is prevalent. That wasn't so prevalent 10 years ago. So you have a possible another store of value, which I think the gold market still hasn't fully appreciated. Right now we have the US dollars at 20-year highs. Who would have thought if we had a situation with runaway inflation, the Fed just going nuts over the last couple of years, printing money and buying all these mortgage-backed securities and all that fun stuff, you would think the US dollar would be at 20-year lows. Instead, it's a 20-year high. So that doesn't help. People want to buy gold in US dollars. And obviously, if you have the US dollar, it's less expensive, but it's typically as the dollar goes up, it usually implies that gold is going to go down. So for those reasons, also you take a look at the chart. 1835 is the 200-day moving average. I think I have to go pull that up. So I think if it breaks under that, it heads to 1775 pretty quickly. So you have a double whammy. So if the market finds weakness, the miners are going to sell off regardless of what gold does. And then even if the market doesn't sell off and gold just drops, the miners will sell off. And then the double whammy scenario is if both the market drops and gold goes down, you see an exponential increase in JDust and Dust. And then GDX, which is the miner ETF, will go down. So that's kind of the thought process. Yesterday I was looking for some possible hedges, and with the premium so high, it's tough to find an inexpensive play to benefit from downside from the market or downside from gold, and that's what the miners offer. So that's kind of my thought process there. I posted in the watch list if you can read my thoughts. So that's why I got those calls, and I might look to get some Dust later dated strikes just in case. So that's that. IBM continues to perform well despite the market gyrations and the sell-off the last three sessions. If you look at the IBM chart, it almost looks like a normal market. Like the stock has gapped after its earnings, ran up to 140, consolidated here between 140 and 134, and it looks like if the market finds any type of footing whatsoever, IBM's going to take off. So still have the June strikes, the May 140s, some May 140s left. I'll probably hold those another day or two depending, because as we start to head towards next week when they expire, the premiums are going to erode rather quickly, so I'd rather lock the rest of those in at some point, unless IBM shows some strength today. So that's it. That's IBM. That's JDust. That's gold. Oh, Ring Central. RNG is the ticker. A name that has just been destroyed, but I guess you can say that for pretty much every tech or momentum name. They had, I think their CEO left, president left. This is back at the start of the year. Just some issues. The stock just pummeled. And even yesterday before its earnings, pummeled down 9 or 10%. And now you look, and great earnings, raise their guidance. Maybe, it's tough to tell in an environment where people are selling pretty much anything regardless of earnings. But if there's a shining star in some of these names, you have to look at Ring Central, which was just a great report. So I'm not going to sit here and load the boat on calls. That's the last thing I want to do in this environment. But certainly a name I'm going to be watching today for some possible speculative calls. And I was looking this morning. It might be tough to find a decent strike at the open because the spreads are going to be wide. And maybe some, I was thinking 75s, but it looks like that's not going to happen. I don't know, maybe some 80s. And the 80s closed 285 by 350 for last month. I mean, for the monthly strike, which is next week. But the 80s, 225 by 285 they closed. So those are going to have some type of premium crush. I don't know how far they'll go down. They might be $1 or so at the open. I don't know if I'll get those. Maybe I'll look 81s or so because still some time in the week. Definitely a name I'll be watching. Who else had crazy earnings from Upstart, right? Was it Upstart? UPST, right? Yeah, crazy. You start looking at some of these names in that whole space that just went on a tear. Lending Club, Upstart, Affirm, even Lending Tree. Actually, Lending Tree had a relief quarter last week, so that could be a nice bounce play. But you take a look at these names that benefited from the low rate environment. And now as rates start to go up, people are probably less apt to take out loans that instead of being able to get a 50 grand loan at 2% or 3% or whatever that rate may be. Now it's 6-7%, and that just totally changes your monthly payments. If you start doing the math on, let's say you have it's a 5-year loan or what have you. I mean, a 3 percentage points on a $50,000 loan. That's a big chunk of change. So big difference in the amount of payments you have to make. So not saying that's the end of lending Upstart, but then maybe you start to price in, or people, if the economy starts to go down, I wouldn't say go down the drain, but if there is a recession and people start to pull back spending, other people have, to get laid off or what have you, and then they can't make their payments, and now you have defaults and things like that. So delinquencies. So I think this all plays into why Upstart's just getting absolutely hammered again. One of the analysts, I think, had a 200 something price target on Upstart. They downgraded it to sell and put it to like $40. It's just funny how it all works, that the analysts they're playing catch up, and Upstart's just a great example of that. But probably just a great example of the current market and the earnings season that it's going to be winding down the next week or two. There's still plenty of earnings for this week and next week, but certainly maybe it's pulling off the Band-Aid. We get all these bad earnings out of the way, and then we could start to look to hopefully find a bottom. I wish I could sit here, and I put on the watch list. I wish I could sit here and say I feel like we hit a bottom. Maybe it's a short-term bottom and we bounce this week, but I want to see like capitulation selling, a big 1 to 2% sell-off in 5 or 10 minutes time, and then a crazy reversal, and then maybe that'll mark some type of bottom, which would be, I think, welcome relief. I think that's it, folks. Let's have a great day. We got 4 minutes to the open. Other names I put on a watch list: Qterra, ticker CUTR. That name sold off. No catalyst yesterday. They actually had an analyst upgrade yesterday, and the stock still sold off 15% or so. So that could be a nice bounce play. All the medtech names got destroyed. Intuitive Surgical, which just selling off after its earnings nonstop. One of these days that will find a bottom. What were the other names that had on there yesterday? Qterra. I'll think about it. I'll be back on the audio. Let's have a great day, folks. Rock and roll.